Hi everyone, my name's Michelle and I wanted to talk a little bit about cash flow in your business and help you identify areas where your cash flow might not be optimum. And by identifying the problem areas, that will help you move towards finding solutions and having better cash flow in your business. And I'll talk a little bit about solutions here, but it'll mostly be focused on identifying the problems and signs that there's something wrong with your cash flow or it could use improvement. So the first area that I usually look at when thinking about cash flow would be money coming in, cash receipts, income, money from your customers for the products and services that you sell. Probably one of the first areas that I would suggest looking at would be your receivables. How long is it taking customers to pay for their products and services, and how many bills or what percentage of your business is not being paid or being written off, or the customers taking months to pay. Now, this may not be relevant to all of you. Some of you have businesses where the customer prepays. For example, if they're buying a product, they'll probably pay for it in advance. This is more related to having a service-based business where you bill your customers after the fact. So if you're having a lot of problems with receivables, then this is definitely an area that I would suggest looking at and focusing on for a while, because you can be very profitable, but if your customers aren't paying you, then obviously that's going to be a problem in your business. And some things you can do if you're a service-based business is move towards having customers prepay for certain services, especially new customers. And then also I would suggest having a cutoff point. If your customer gets over a certain threshold of being late on their invoices, then you may decide to remove that client from your business. I definitely recommend having some policies in place related to receivables. And then another area that I would suggest looking at would be your pricing. You want to be in line with your competitors. So you don't want to be way above your competitors unless you're providing a much higher level of service. And obviously you don't want to be significantly below your competitors as well. And then you also want to make sure that the price is profitable. So you're going to want to do some analysis here, and you can even hire a company to help you do this. But you want to look at how much you're charging for your products and services, and how much it costs you to provide those products and services. So you're going to want to really drill down and try to analyze each individual product, or at least your main products and services. For example, say you are a repair company that goes on site to do repairs for customers. You would want to look at how much it costs you on average to send an employee to that residence or business, how much it costs in vehicle expenses, how much it costs in labor, and things like that, and make sure your pricing is going to bring in more money than it costs you to provide that service. And that sounds really basic, but sometimes until you really sit down and look at that stuff, you don't really know how profitable your specific products and services are. So that's definitely something to look at. Make sure you're charging the correct prices. And if you have to get help with this area, then definitely be open to hiring an outside company to come in and help you with this. And then probably the third area, this is what most people focus on, but I think you have to get efficient in some of your other areas, your pricing, making sure you're profitable before you get to this point. But obviously you also want to sell more products and services. So you want to look at the volume of products and services that you're selling and make sure you are meeting goals and selling the number of products and services that you want to sell, and hopefully have plans in place to increase sales if that's what you want. But obviously volume is going to help increase your cash receipts as well if you are selling more products and services. And then for expenses, more than likely, I would look at the largest expenses first. just because that's going to make more of an impact if you can look at those expenses, make sure you're not overspending. And if you need to make any changes, you're going to have the biggest impact if you make changes with the biggest expenses first. So if I were to look at a business and try to help them improve their cash flow, I would mainly focus on the largest expenses and see if any changes could be made and if it was worth it to do so. You know, some things like if you're in an office space or a warehouse space or something to that effect, moving to a different space just to save a few dollars is probably not going to be worth your time. So really think about whether it's going to be a good use of your time and money to make these changes. For most companies, their largest expense is payroll. And obviously, that's going to be a little more difficult to reduce if you're trying to reduce expenses, because obviously you're not going to be able to tell your employees, hey, I'm going to reduce your pay. It isn't going to go very well. So my suggestion would be to just make sure you're using your payroll dollars efficiently. In other words, look at what your employees are doing. Are they doing jobs that they're good at? Are they doing jobs that they're efficient in? Do they have a lot of idle time? If they have idle time, are there things that they could do in that time that would help your business in some way? So you're really looking more at efficiency and getting the most for your dollar in the area of payroll and paying employees. And then, of course, another thing that I suggest looking at is your turnover rate. If you have a really high turnover rate, that's a clue that something's not right in management, or something's not right with the pay versus the job duties, or something to that effect. So if you have a high turnover rate, that's probably something I would focus on trying to resolve, and that may help your cash flow as well. Because if you have to hire a new employee, it costs you so much. It costs you money to go out and find an employee. It costs you time to go find an employee. And then when they get hired, you have to train them on your systems. And it's just not a good situation if you have that high turnover rate. Now, some jobs are going to have a high turnover rate no matter what, like seasonal jobs and restaurant type jobs and things like that. Some of those things you can't help, but you can try to have a good work environment and pay your employees appropriately for the duties that they are doing, give them raises appropriately and things like that. Of course, that could be a whole video by itself, but it was worth mentioning that that's something to look at in this area of expenses, especially if it's your largest expense. And then the third area to look at would be your accounting. And what I mean by that is you want to make sure your accounting is accurate, because if it's not, then some of the calculations you did for 1 and 2 may be leading you in the wrong direction. So you definitely want to check your accounting and see if it's accurate. Now, if you don't have an accounting background, you may not know for sure if your accounting is accurate. So I'm going to give you a few suggestions to look for things that might help you in that area. So first of all, I recommend reviewing your reports on a regular basis, just so you have a feel for where things go on the reports, what your usual numbers look like. And then that way, if something's way off or looks off, you'll notice it because it's something you're looking at regularly. And in most accounting softwares, you can look at a report and click on any of the numbers, and it will let you drill down to the details behind where that number is calculated. So I definitely recommend spending some time on that on a regular basis so you can see where the numbers are coming from, and that will give you an idea of what kinds of things are going into different expense categories and revenue categories. So that may be helpful as well. And of course, if something just looks wrong, like for example, if your profit and loss shows you a big profit, but you feel like you don't have that much money in your bank account and you don't understand where the differences are, then that's definitely something to look at and ask questions if you have an accountant or a bookkeeper that's doing your accounting. And then another thing that I suggest is having regular meetings with your bookkeeper or accountant and asking questions so that you can get clarity and understanding of different items on those reports. So that should help. And then another thing that you can do is ask your CPA who prepares your tax return to do an extra analysis and just review your books thoroughly to see if everything looks correct. You might have to pay a little bit extra for them to do this, but it might be worth it just for peace of mind. So I hope this video was helpful. I hope it gave you a little bit of clarity and some things to focus on. If you have any questions, feel free to comment below and I'll try to answer them. Otherwise, thank you so much for watching.